Hello people. Right, what you're watching is sort of a halfway response to a DM about a potential trade that failed for Hans on Twitter. So I'm going to clear the chart down and start again. Just so that you see the analysis will almost look, or will always look almost identical. Whether you just throw it on your charts in a few minutes, or I'll keep that there because that's where his original failed trade originated. That was the chart he showed me, sent me, or you sent me, Hans, I should say. So you said you had the 3 candle reversal here, which you can clearly see. The break and close up here on this 5-minute chart. On the 15-minute, you suggested it may have failed because you should have looked at the higher time frames. Well, on the face of it, we can see clearly you are in a massive pullback. The 15-minute did 3 candle reverse up as well, but I think what you can see happened was you took the trade too early. But I can see why you took the trade. That's why we had that support level there. That blue zone, if you like, because you saw support there. I imagine you didn't have that on your chart. But what I started to say in my answer to you in the direct message was, as you can see, all the power is to the downside. Now we do take trades against this sort of power when we get these sort of volume bomb setups, as Simon calls them, the vol bombs, which is where you've got oversold to a small bar, momentum bar, which means on the higher time frame, obviously it will, lower time frame, it will look like a cross of a break above the 0 level. I can see you've got divergence here as well, which is good. But the only thing I did do, and that's why I put this on my charts, from the open of the day there, you've only actually got about 120 pips or thereabouts, 130, and gold can range between anywhere 450 to just knock a line off there. So that's 250 pip movement over the 5 days. That doesn't cover these days, obviously, because that's the 14th, but regardless, you've only moved 130 pips, and gold moves 3 to 400, so you hadn't even gone halfway through. So it's a risky reversal. It wasn't overextended. That's the point I'm trying to make. Okay, so it was just a reversal, and as I explained now, the 3 candle, you should have waited for the pullback, and then you would have dropped into negative or contra, if you like, reversals. So you would have reversed against this M5 with that reversal down there, and categorically whatever you do, you have to have a 3 candle reversal back in the direction of your trade M5. That's why we always wait for the pullbacks, and the pullback area to wait for is the 3 candle reversal level, because that is the 5-minute resistance that was broken by price when it confirmed up. Okay, so that's why that blue level was there. And then we've also got the resistance above us, which you can easily see by just looking on the higher time frames and marking out the potential 30-minute reversal levels and so on and so forth. That's why we have them there. A 30-minute high would be a problem area, and these, any one of these could be called a problem area, or even higher time frame. That's why we always mark the levels, and that's the only area that Aaron's indicator cannot help us really. All we have to do is eyeball the fact that we are trading into other areas of resistance, which are candle highs. There's an H1 level there, H1 level there. I'll draw them on anyway, and it is good practice, as it were, to employ these methods. Just checking I'm on the right day. Yeah, I'm still 14th. So drop down now to the 5 minute, which was the chart you sent me. And zoom in. So we have a unshallow 3 candle reversal. Ideally you want it to close about there, just do a little pullback and off she goes. You can draw the descending trend line on there. That was the low prior to the 3CR. Then you can draw an ascending trend line. We could drop down to the 1 minute to clearly see the ascending. You can start to draw something like that, and there you are. You have actually come back and tested that 3CR high. Let's draw that on there. That's the level there, so we'll just put a level through the middle of that. I know you didn't really want this deep an explanation, Hans, but hopefully this will help a few people. Bisque, that's a pretty colour. So there's your 3 candle reversal level. This is where you should be hoping to get a entry off of that old resistance acting as new support, with the ascending trend line. Obviously these trend lines are very vague. I don't ascribe to the 3 touches and all that malarkey. You know how I draw my trend lines, mainly on the line charts. I absolutely love line charts because you can clearly see the lows and highs forming in the on the chart, as it were. So hopefully that answers your question. I can see why you took it off that support. The only thing, it was too early in terms of distance from the daily open, not overextended. Oh yeah, the M5 also shows you all the power is to the downside on the RSI, no real strength at all. Then M15 also is just it hasn't even broken the 0 level, but that isn't necessary if you are overextended. If you're overextended, that is the vol bomb. Always makes me giggle, that one. If Simon, you're watching this, or Aaron, what a name. Good name. I suppose you could call it the momentum bomb too. I like momentum, it just rolls off my tongue better, but we'll stick with vol bomb, but always expect me to have a little chuckle. So there you are. Sorry, off topic, Hans. Hopefully, I think the main thing wrong with that was failed to wait for the pullback to the breakout level, the 3CR level, the reversal level. Got in too early, or just entered too quickly, and then always keep the higher time frames in in view, as it were, and double check where you are in relation to the ADR, or in relation to the daily open, even better. So okay guys, thanks for watching, and I hope that helps, and have a good Tuesday.